Today, we're going to rank some of the worst trades on Wall Street Bets, and then we're going to go through 10 of the most popular stocks to give you some ideas on new trades that you may want to make. But you know what? I'm not going to delay too much longer. Let's go through the first two right now. So, first, before we get into anything, we need to establish the trend of the market, right? The SPY still has a buy signal. So, that's a great start. So, the market still has a buy signal. And then if we go into the market, we can see the 10 is over the 20, price is over the 50. So the market has a bullish trend. So the trend is there and the buy signal is there on the market. Now it is getting pretty greedy. We're up at 71.46, just coming off the back of the first pullback in greed we've had since July, which is crazy. But now it's popped back over 70. When it gets over 70, the market tends to be really overheated and it's difficult to make successful trades. It's very difficult to make successful trades. One of the things that you need to be aware of, though, is market breadth. Now, what does breadth measure? Breadth measures the number of stocks, at least in our platform, with buy signals. Now, what we see over here is we're getting less and less and less buy signals, which means more and more and more sell signals. And also, on top of that, you can look down here. I know it's behind the chat window. Let me drop off chat for a moment here. What you see over here is less and less uptrends, more and more downtrends. Okay. So if you are struggling right now in the market, you don't have to participate in the market, right? You can sit in cash and not F up your portfolio, right? Especially on a day like we're seeing right now, where it's a big pullback in the NASDAQ and in the S&P, right? All you have to do is follow your plan, create a plan, follow the plan. And if your plan is involving market breadth and market trends, then you will be ahead of the curve. Okay. I've not been aggressive in the market. I've been holding QQQs via TQQQ for a minute because that is my defensive plan. And I'm going to be up nicely on this trade. Even with the pullback this morning, I'm still up nicely. And that is what we talk about every single day in the Outlier Trading Room, the invitation only live streams. Now, let's take a look at Apple first. Apple, remember, the trend and the signal are going to be the same no matter what stock you're looking at. Everything on the market will stay the same. But we're in the tech sector now. So 40% of the move is due to the market. 30% of a stock's move is due to the sector, and only the last 30% is due to the stock itself. So we want to find all 9 working in our favor. Now, you're not going to find that today because the breadth is gone on the market, and that's going to apply to every stock. But on Apple, the Outlier 9 shows 7 of 9. One thing you'll see right here is the sector, on average, the sector score is getting less greedy over time. And that's actually what this is showing right here, plotted over time. So right here, you can see that 208 companies are greedy, 122 companies are fearful in the tech sector. And this shows just how greedy and how fearful they are. And on average, this number is moving down closer to fear. Okay, so that's what this is representing. But Apple got the buy signal on October 28th. Let's go to Apple real quick. October 28th is right here. And it's been going basically sideways since that point right now. Even with that little pullback this morning, it's still basically going sideways since then. And that's why we want to have the sector and the market working for us and not just the stock itself. Even though it's getting more greedy with the buy signal inside of a rising trend with no order blocks for it, right? Trading is meant to be effortless. And right now, that's not what we're seeing in Apple. Let's go to the next one, AMD. This is what effortless trading looks like. Getting that buy signal on October 7th and just watching it run. October 7th is right here. AMD from close to close yesterday. That's 22% on AMD. 22% on AMD, getting more and more and more greedy all the way up. That's what we want to see right there. Now, of course, from Apple to AMD, they're both in the tech sector, right? They're both at 7 of 9. So really, the move that's going on right now, it might be a bit too late for you to get in, but we don't have a sell signal coming on for AMD just yet, even though it has this big, beautiful move. It's got earnings, though, and I'm telling you right now, I'm not calling for a crash. I don't do that. But what I am saying is I don't trade earnings. I don't make predictions. I don't trade earnings. But you know who does make predictions? Goldman Sachs, and Morgan Stanley. That's right. Morgan Sachs and Goldman Stanley both make predictions of corrections, right? And so when I saw this headline come through, I'm like, are you freaking kidding me right now? It's likely there will be a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months, said Goldman Sachs CEO David Solomon. This is news. This is literally what the market has done every year. every 2 years for the last history of time. Since Jesus walked on the earth, this is what happens every 12 to 24 months. And this is apparently headline news today. Go jump off a bridge, CNBC. A 10 to 15% drawdown happens often. Yeah, no shit. Even through positive market cycles. Oh man, it's like they've never heard that stocks can go up and stocks can go down, right? We should also welcome the possibility there can be drawdowns of 10 to 15% that are not driven by some sort of macro cliff effect. How is this news? How is this news, Vincent? Wait, the market goes down? Yeah, how is this news? I don't know. But this is one of the reasons why I never want you to predict anything, because predictions are like elbows, right? Everybody's got a couple of them and they both smell bad. I don't know if your elbows smell bad. My elbows don't smell bad. You need to take a shower. That's what I'm saying. Let's continue on. I'll give you one more stock before we start watching this video here. How about Amazon? Amazon, the big old giant move up that happened a couple days ago, right? Huge move up. This is 100% due to my wife having access to our credit card. For no other reason has Amazon gone up from October 29th to where it is today by 11%. The only reason this has happened is my wife having access to the credit card. This is in the discretionary sector. So the discretionary sector is getting more fearful, and it's got bearish breadth down here as well, getting less uptrends, more downtrends. So Amazon's sector is not looking that great, even though the stock is definitely bucking the trend right here. Now, is it time to sell? I don't know. That's up to you. Where's your trading plan at? But right now, I don't see a sell signal, an outlier. And what you could do, if you're curious of like when the time is to sell, you could use a moving average, right? You could use the 10-period moving average, but it's got a long way to go, right? That 10-period moving average is all the way down here at 231 when price is at 253 right now. So you're going to have to wait a few days for this to catch up. But by doing that, you're going to make sure you don't get out prematurely and only when the stock starts to reverse. So let's I'll keep these other 7 in my back pocket, but let's watch this video ranking the year's dumbest WallStreetBets trades. Now, here's the deal. There's so much that we can learn from this. In Lambos or food stamps, we can learn a ton. So I want to see if we can actually see, using OVTLYR, where the Lambos were, where the food stamps were, because some of these people did amazing. Some of these people blew out their accounts. You get to choose how much risk you're willing to take on any individual trade. I know it sounds crazy, but you're in charge of every trade. You're in charge of where you get in, you're in charge of where you get out, and you're in charge of how big you get in with. That is it. Once you're in, you're basically strapped in. You go to Six Flags, you put the harness on, and you're on the Batman ride, and you're like, all right, let's do this, right? And you're clicking up the hill, right? We don't know where it's going to go. Right? You can't see because you got, everybody else's seats in front of you. You're in like the third from the last row. You can't see because you got all these yellow chairs in front of you. And then you're clicking. It stops clicking. You got that moment of like, oh, I don't know what's going to happen. And then the momentum starts and you're like, down around the corner as fast as you possibly can. But you decided when you entered, you decided when you exited, and you get to decide how big of a size that you put on. With that in mind, watching these videos, you need to pay attention because these people chose this outcome. I know it sounds crazy, but they chose these outcomes. They had every right to get out. They had every right to position size differently, but they chose what these outcomes were. Let's watch together.
$1 fortune to another user making 6 figures in college, we're going to look back at the dumbest WallStreetBets trades of the year. External Detective 61 is a user who got a little bit too greedy with Beyond. Unlike a lot of other users.
Okay. I actually am very excited to do this video. BYND. Oh, order block city. Good gravy. This is the Gotham City of order blocks. Beyond Meat. Now, Beyond Meat has been in a horrible, terrible, no good, very bad downtrend since basically the beginning of time. It's gone down 98% since it was sorry, that wasn't order blocks. That was my measurements there. It's gone down 98% since its high. And a couple of weeks ago, when was this? Late October 23rd, it did have this huge move up. It went from around 48 cents a share to $7 a share. What kind of a gain is that? From the bottom to the very tippy top, that was only a 1,400% gain. A 1,400% gain. So in theory, you could have made big old bucks on this. You could have made big old giant bucks on this. So let's see about this person.
External Detective actually did a pretty good job at buying early. He caught a huge ride up and turned 30K into 116,000. Beyond
Yeah, let's go. Some people would say that's not very much. He clearly doesn't know what he's doing. I'm surprised the Redditors even let that post go because, you know, it's not in the multi-thousands of baggers, right?
just hit $7 and he was feeling on top of the world until the stock came crashing right back down.
Wait, stocks go down? Wait, stocks go back down?
116K back down to not even 30K, but only $6,000. Hunter is another
Ooh, that's pretty brutal. So he actually lost money on that trade. And that's the brutal part of trading is if you don't have a plan, you're never going to be successful. It's just a fact. Now, how could we have looked at this and had a better outcome? Well, I don't know if Outlier covers Beyond Meat, BYND. We covered 2,600 of the most liquid stocks, and Beyond Meat is not one of them. And that's okay. We are adding 6,000 more stocks. We're having to do some server upgrades because the amount of data that we took in kind of like overwhelmed our servers. So the 6,000 new stocks are coming soon, and I wouldn't be surprised at all if Beyond Meat is one of those. But you know, taking a look at it objectively, let's say you got in right here. Just for example, would it be possible to find the exact bottom? No, but let's say you did. Let's say that you're Nostradamus, you're Chris Stradamus, you are Stocky Locky Stradamus, right? Let's say that you were able to get in, and for every one ATR move it went up, you rolled your options. Okay, now I'm not saying that he did, but let's say, for example, if he could have, this had a ATR of 29 cents at the time. So let's say from here to here was 720, so 7.20, and you divide that by 0.29, means you could have rolled it 24 times. Now, why do we care about rolling our options? When we roll our options, we reduce risk in the trade, right? Remember, he started with around $30,000. We reduce risk down to zero. Hang on, you'll get there in a minute. Now, I don't know if it has options or not, but that's what I would have done. You could reduce risk to zero. Guaranteed profits. But let's talk about this. So by rolling the options, you lock in partial profits, you reduce risk, and you keep the trade alive. And if you rolled it 24 times all the way up, 24 times, you're buying one option, selling the one you're at, buying another option, selling the one you're at, buying one option, selling the one you're at, you would have, I guarantee, you would have guaranteed profits. And I'm not exaggerating, you would have guaranteed profits because you would have rolled so many times so big that the amount of credit you took in those rolls would have offset any of the debit that you paid to get into the trade. And then when it crashed back down, you know what you would have done? You would have been going to the bank, because even if it crashed back down and you lost out on the very last one, who cares? You've rolled enough times that you've guaranteed profits. You could have had a lifetime of earnings in one single trade, potentially 4 candles, just by doing this. Now, if you have rolled options and you have seen just how powerful rolling options are, like Manny's saying right here, it is a ninja hack. Do me a favor, in the chat, type ninja. Trav, what happened to your username? Trav's username has changed, but rolling is a cheat code. Like I say, put ninja in the chat like Charlotte has done if you have been able to do the ninja hack of rolling options. It is amazing. Let's keep going with this.
User who got in on the action, but he wasn't even lucky enough to buy before the pump. On October 22nd, he threw just over $60,000 into shares on the company. Air23 Jumpman said, "How much longer are we holding up this stock?" But 2 days later, Hunter got back to us with an update on his portfolio. He was down over $40,000 on the stock, and things haven't gotten much better since then. He commented, "As a long-term investor, I dollar cost average when I can, not..."
Oh, we're still talking about Beyond Meat? Are we still talking about Beyond Meat? Did I miss something here? Let's rewind just for a second.
He wasn't even lucky enough to buy $6,000. Hunter is another user who got in on the action, but
okay, still the same stock.
He wasn't even lucky enough to buy before the pump. On October 22nd, he threw just over $60,000 into shares on the company.
So October 22nd. He bought literally the top. Oh, that sucks. He literally bought the exact top.
Air23 Jumpman said, "How how much longer are we holding up this stock? But 2 days later, Hunter got back to us with an update on his portfolio. He was down over $40,000 on the stock, and
So 65%.
things haven't gotten much better since then. He commented,
Sorry, negative 65% returns.
as a long-term investor, I dollar cost average when I can.
Now this right here, this is exactly a novice mistake that a lot of people claim that they're geniuses will do exactly. Okay, so let me show a couple slides from one of my mentors. Let me see if I can find the exact slide I'm looking for real quick. Hold on. Where is it? Pros focus on managing risk. Oh, it's this one. Losers average losers. Let that sink in. This is one of the greatest traders ever, Paul Tudor Jones, one of the market wizards. Even he had to put on his board right there, losers average losers. If you're dollar cost averaging into anything, you are a loser. You will continue to be a loser until the stock decides to turn back around. Now, here's the deal. I was on yesterday talking specifically about this. Buy stocks as they're crashing up, and don't buy stocks as they're crashing down. AMD is a perfect example. For a long time, it was crashing down, and then it turned around and was crashing up, and it has done phenomenally since crashing up. Beyond Meat, unfortunately, has a track record of only crashing down. So therefore, you've never even had a chance to buy it as it's crashing up, except for this one day. And if he lost 65% on this one trade, I can guarantee you he didn't even know where he was going to get out. And why would he? He's a long-term investor. He's going to dollar cost average when he can. Losers average losers. You're not a loser. You're an outlier. And that's right. That's why Batman only buys stocks when they're going up. Precisely.
And not really sure how sound of an investment Beyond is long-term, but I guess we'll just wait and see how things go for him. Legitimate Space 8847 is a user who has had his fair share of ups and downs over his past 3 years on the subreddit. 3 years ago, with an account deficit of $230,000,
holy crap. How did that happen?
Things weren't looking good. He got rid of the deficit, which is good, but came back shortly after to share another not-so-pleasant screenshot.
Only down 59.9%. It's off to a good start. It looks like the moment he turned on investing, it was like, do you ever, 89% of our audience is men. So I know I'm talking to men right now. You ever shave in the sink? Like when I shave, I like to do the old school brush and whatnot, right? And I fill up my sink with water and, use that to rinse out my blades and just shave my neck a little bit and then right under my chin. That's all I shave. And then when I, do the plug, it all goes down the drain. This reminds me of it all going down the drain. This is exactly what I see going down the drain right there. Losers average losers. I feel like I've heard that in a song somewhere. I agree.
Not so pleasant screenshot. After a 2-year break, he shared his $21,000 gain for the day thanks to AST Space Mobile.
All right, AST. Let's go to AST. I think the majority of what happens on Reddit is just gambling on the stock market. This is not sophisticated investing. This is not fund managing. This is just gambling.
He followed up last summer with even more good news. His portfolio was up 422% over the past
Let's go, bro. You're doing something right.
3 months and was now worth $86,000. At the end of 2024, he shared another gain, this time $9,700 with SPY puts. But this is where his luck starts to run out again. Back in January, he got himself into another account deficit. This time it was,
what are you doing? Holy God. Hold on here. How are you up 80-something thousand and then end up with a deficit of nearly 600,000? So you basically had a $700,000 swing and somehow got yourself into a $600,000 deficit. I would bet you that he broke the golden rule of trading. If you know what the golden rule of trading is, type the word gold in the chat. If you don't know, type the word silver in the chat, because I'm going to teach you either way. Type the word gold in the chat if you know what the golden rule of trading is. The golden rule of leverage, I should say. Type the word silver in the chat if you don't know what that is just yet. Now, I'm looking at this. Early assignment. Early assignment. One or more of your options contracts were assigned prior to the expiration dates. You know what that tells me? He broke the golden rule of leverage. Let me see. Where is the golden rule? There you go. The golden rule of leverage is never put yourself in a situation where you can lose more than you can make. Now, how do we do that? We do that by selling options. By selling options. This right here, my friends, is a worst case scenario. But it seems like he's done it twice. He must have the worst luck in the world. Twice, he has put himself into multi-hundreds of thousands of dollars in deficits because he broke the golden rule of leverage. Never put yourself in a situation where you can lose more than you can make. Now, I get selling options sounds sexy as F. So freaking sexy. I understand. Because you get high win rates. The stock can move up, it can move down, it can move sideways. It's a win-win-win all the way around, right? But there is a point in time where it flips. And it might take you 6, 8, 10, 12. And I've demonstrated this many times. We have a whole playlist about options deep dive. And I'll do it again tomorrow morning about how important it is not to sell options. Because for me, I lost $200,000 doing this. And it literally was watching an account evaporate with an 84% win rate because I broke the golden rule of leverage, just like this guy did right here. Just like this guy right here. Let's continue on. Oh, Kevin didn't know what it was. Well, Kevin, my friend, I'm glad you're here because you definitely know what the golden rule of leverage is now. Senior Wahoo, Scott, Mr. Bill Allen, gold-plated plumber Fred, Anthony's got it. 24 karat gold from Brandon. He sold options probably. Absolutely. Let's continue on with this. See what they say.
588K instead of a measly 230K. On June 4th, though, he said, "I am about to puke." This was nothing compared to the monstrosity he posted on October 2nd, though.
Wait. This guy can't stop?
Exotic Flatworm 1817 is a user who hasn't had the best luck when it comes to trading options. With his first post, he was down $64,000 all time.
Oh, good gravy. He's down 99%. So he basically YOLO'd into the options and lost all of it.
He was down 60.
It's disturbing. It's disturbing. But this, everything we're seeing right here is normal. I want you to understand right now, everything we're seeing here is normal. What we teach at Outlier is not. What you see time after time after time after time is not what we teach, but it is what is normal. You get to choose how you live your life. And I am not living my life like these guys. Never again.
$4,000 all time. After losing an additional $3,800, he finally ditched Mullen and bought $869 worth of Palantir calls that expired in a few weeks. And only 17 days after holding, he was up $2,400. 11 days later, he showed us the next options trade he was in, but this one wasn't going as well as the first. After about a month of holding AMD calls, he was down over $4,600.
Oh man, how did that happen? AMD has been doing great. Clearly different timing.
By February 5th, he was down.
Hang on, we're talking like beginning of the year. Oh, you mean when AMD was going down and Chris was on YouTube? And I wish the YouTube gods would have granted me access to your algorithms sooner because I was screaming at the top of my lungs, do not buy AMD as it's crashing down. And here's the crazy part. There were so many other YouTubers taking the exact opposite stance. Now's the best time to get in. You got to buy AMD now, right? As it's going from 170, 50, 40, 30, 20, 10, 100, 90, 80 into the 70s. They were screaming the entire way down. It's the best buy I've ever. Buy it, buy it, buy it, buy it. Whereas I came in on the other side and I said, wait until your 10 goes over the 20, price goes over the 50. Wait until the stocks are crashing up. And you would be at profitability months earlier. You would have so much more hair on the top of your head, so much better sleep at night while it's crashing up. Buying stocks as they're crashing up, not as they're crashing down. Holy goodness.
Down 7,300. His calls expired worthless, and he.
Now this is a big deal, right? Imagine you're buying calls because all these YouTubers are out here saying that AMD is the greatest buy ever, and your calls expire about right here. As AMD crashed down 55%, your calls expired right there. right before it finally found its bottom, still a month and a half, 2 months later, and started to go up. Rick says a lot of outliers actually did buy it crashing up. Outstanding. Outstanding. Ooh, Tyne says his friend blew a $3.5 million account with option. That's scary. I heard this story one time. You want to know the fastest way to become a millionaire in the stock market? You ready? You want to know the fastest way to become a millionaire in the stock market? Start as a billionaire. Because your friend, Tyne, probably didn't have risk management top of mind, because why would he? I've got so much money, it doesn't matter. I don't care. I'll just let this trade go. I bet you there were a lot of trades where he said, it's fine, no big deal. I still got lots of money. That's the fastest way to blow up your account. I have so many fastest way to blow up your account. They're all the fastest ways.
Never got to see AMD's run throughout the summer. On August 19th, Exotic Flatworm was tired of constantly losing money, so he threw $30,000 into calls on Nvidia.
Okay, he was tired of losing money, so I'm gonna revenge trade my way back.
Nvidia actually made it right under his strike price after rising 4% in just 4 days. There were only 3 days left till expiration, but Exotic Flatworm wanted to bite the bullet. By expiration,
okay, what he's talking about here is gamma risk. Ooh, this is a great example. By the way, let's jump into several more of those stocks here right after we talk about what gamma risk is. So listen to this explanation. I'll explain to you what gamma risk is.
Nvidia actually made it right under his strike price after rising 4%.
Okay, so coming up to, hang on, I'm gonna have to log into my broker account in order to show you this. So all options have an expiration. Every option, every stock, no matter what, always has an expiration, right? And whenever you buy calls or puts, you are buying a particular strike. It's always going to be that way. No matter what, you are always buying a strike. And that strike does have an expiration date. No matter what, it is always going to happen. So what it says is that the price of Nvidia went all the way up to and just under his strike price, meaning that if it's still out of the money, it will have zero value. When I say zero value, here comes my props. This press penny that I got from the Houston Natural History Museum is actually more valuable than the options that he bought if it expires out of the money. I love press pennies. When we go to Disney World, I get like every single one of those machines I can find. Like we call them lucky pennies. Like a whole booklet of them. They're fun to me. So he's got 3 days to go. So this is a decent example. It came all the way right up to his strike price, but not quite there. So if it expired, let's say that he owned the 210s. If it expired right there, these options are worthless with absolutely nothing. By the way, Daz says that I found you at the perfect time in May, and he's up 47% year to date. Outstanding. Outstanding. Congratulations. Probably learning some of these lessons we're talking about right here, right? So let's talk about what gamma risk is.
In just 4 days. There were only 3 days left till expiration.
Perfect example. Perfect example. Only 3 days left to expiration.
But Exotic Flatworm wanted to bite the bullet. By expiration day, though, Nvidia was actually trading lower than it was when he initially bought the contracts. There went another $30,000.
Okay, this is why when I get to a week before expiration, I will make sure I roll out in time, no matter what. You can't make me hold something the week of expiration because the gamma risk is elevated. Gamma risk is not when Spider-Man walks into the same room as the Hulk. There's a lot of gamma risk there. But gamma risk here is where your option becomes less and less likely to be in the money versus out of the money. So what gamma measures is the change in delta. Delta measures the $1 change of the option strike for every, the change in the option strike value for every $1 change in underlying stock. So for example, this one right here changes 90 cents for every $1 that Nvidia moves. This one right here changes 14 cents for every $1 that Nvidia moves. Okay. Gamma risk becomes super elevated, and these numbers get huge between the strikes. So let's say I go out here and I look from here to here as a gamma of 5, 4, 1, 1, 1. Okay, let's go back to current. We've got 7, 6, 6, 4, 4, 3, right? So what I'm trying to tell you is the gamma risk is heightened because it's more and more likely it will be either in the money or out of the money. And if you only have 3 days left, you have 3 days for it to be in the money and have value, or 3 days to be out of the money and you have nothing. You get, hang on, let me find that. I know I have it here real quick. you get nothing. This is exactly what will happen.
It's all there, black and white, clear as crystal. You get nothing. You lose. Good day, sir.
Yes, and Willy Wonka will come and smack you across the face because you let that option expire. Worthless.
And since then, there haven't been any more updates from him, so hopefully he takes it easy with all the reckless trading.
No, he's gone. Let's go to Google. Google in the communications sector. The sector is getting more fearful, bearish breadth. Google's still sitting on a buy signal from October 21st. Looks like it worked out really, really well. But of course, remember, 40% is the market, 30% the sector, 30% the stock. When you get all of it lined up together, it makes things so much easier. Let's go to Meta. Meta, however, is looking absolutely brutal, right? After earnings, a huge drawdown. We're sitting on sell signals now, getting more fearful. Also in the communications sector, right? The path of least resistance right here on Meta is down, and I would not be buying Meta no matter what. How about Nvidia? Buy signal came through on October 30th. We're back to the tech sector. Tech sector is not perfect, but it is definitely better than the communications sector. And let's go to Palantir. Now, Palantir just had a huge nasty move down this morning. Let's see. It's only down 8.5%. It's only down 8.5%. I'm a long-term investor in Palantir. I need to buy more of it. I need to buy more of it. No, you don't. You need to make sure that you're following the trend of the stock. And right now, it gave up the 10-period EMA, which means the short-term trend is actually down. Short-term trend is actually down. We got 3 more that we're going to go through after a couple more stories. I love the stories.
Strange Manager 6801 is a user who got completely wrecked trading options. He used to be a very frugal person and rarely spent money on things that he didn't need, but he quickly turned to the dark side and started YOLOing his money on options. He quickly made a few $1,000s in profit on his $50,000 account, but after that he lost $50,000 in 2 days.
Come on. Remember what I said earlier? You have complete control over your trade, where you get in, where you get out, and your size. You have complete control of this. Bro blew up his account in 2 days. He had control of this.
Definitely a big change in his once frugal mindset. Only a month later, he was down another $4,700 on 0DTE SPY puts. It seemed like he was going to lose even more money, but surprisingly, he said, sold for 20K. He wouldn't be smiling for long though, because 2 weeks later, he showed us the most recent screenshot of his portfolio. With $0 in his portfolio, it looks like he's done
Oh, well, at least he's not negative $588,000.
trading, whether he likes it or not. The next user is a college student who used to be pretty broke, but found WallStreetBets and went all in. He, earlier this year, back in February, started with just $2,800. And threw that all into AMD leaps. Things were off to a slow and unprofitable start, but he luckily sold for a $3,000 profit 3 weeks later. With just about $6,000 in his portfolio, he was just throwing money on calls when stocks were down and puts when stocks were up.
Okay. Now, buying calls the stocks are going down, buying puts the stocks are going up. With the thought of maybe he was thinking about the efficient market theory. The efficient market theory will tell you that stocks are random. They're going to do whatever they're going to do. They're going to always go back to a midpoint. That's not true, right? The efficient market theory does not allow for trends. And you can't tell me that stocks don't trend. The efficient market theory does not allow for trends. The efficient market theory would say, you know what? Palantir, when it was $123, there's no possible way it can go to $192. No, that can't happen. It has to go sideways. See if we can find a stock that's gone sideways. Here we go. The efficient market theory says this is what happens to stocks. They move up and they move down and they don't really go anywhere, right? Now, let's keep in mind that PayPal absolutely did the market cycle right here. And the market cycle does not work with the efficient market theory. The market cycle can't work with the efficient market theory, because how could you say it could have a big move up like this? And then how could you say it has a big move down like this? No. The efficient market theory is something stupid where it falls in the sideways range.
This actually worked fairly well for him, and a few weeks later, he made just over $10K with open options. On July 23rd, he threw $8,500 into AMD calls, and 6 days later, he sold for a $3,600 gain. On August 1st, he YOLO'd half of his portfolio on 0DTE SPY calls, and somehow—
Why? 0DTE means that, let's go to SPY real quick. Remember, we talked about how all options have an expiration, no matter what period, full stop. Every single one has an expiration. Let's say, for example, that I was bullish on SPY, and a lot of people do this, and I don't know why they do this, because the gamma risk, as we talked about, is exceptionally high. So let's say, for example, they look at the price today and they're like, you know what? It's down 90 basis points today. 90 basis points means 0.9%. It's down 90 basis points today. It'll come back. So I'll go out and I'll buy calls on the, I don't know, let's do the 676. I don't know. I'm just making this up. I don't know what I'm doing. So I'm just going to buy one, right? And it's at 675 right now. And if it doesn't get to 676 by the end of the day, everything that I put into here is gone. Remember, it is worth less than my press penny from the Houston Museum of Natural Science. But you know what? It could work out, and it could absolutely go up. And it is absolutely gambler's mentality. It's absolutely walking in the casino and betting all on black or betting all on red. If that's how you trade, you're doing it wrong. I'm just full stop. You're doing it wrong.
Now he once again got his hands on
And it's gone. That's a good South Park reference. I like it.
another great gain, making 6K in just a few hours. He was feeling so confident, in fact, that he once again YOLO'd half of his portfolio on even more 0 DTE SPY options later that day. Except this time, he got puts instead of calls. He threw 11.6K into 0 DTE puts and sold not too long after for a $2,100 profit.
Bro is clearly addicted to gambling. Like, he likes that high of, oh, you know what? It's going to go up. It's going to go up. Oh, I got in. Oh, it's going to go down. Oh, it's going to go down. It's going to go down. I got in. That's not how I trade. But, you know, I'm a professional fund manager, and he's somebody on Reddit who's made this video. So I don't think this is going to work out all that well.
A couple weeks later, he saw some guys say Google calls a few times, so he YOLO'd into calls that expired in 2 weeks. Google did pretty well and rose more than 6% over the next 10 days, which is when he sold for a $13,000 gain. He felt like the stock still had more room to run, so only 2 days later, he threw $28,000 into even more calls. This time, he got calls that expired out in December, but only.
Andy's got a great point. If you're doing trading properly, if you could speak English, if you're trading properly, it's pretty boring most of the time. Yeah, exactly.
12 days later, he sold for a $7,000 gain. On August 29th, he YOLO'd 28.5K into even more Google calls. And in only 4 days, the stock jumped an additional 9%, so he sold his calls for an $11,000 gain. This left him with $52,000 in his portfolio.
And the frustrating part about this, because we all know where this story is going to go, it's going to evaporate at some point, is that I don't think he has a plan. I think he scours Reddit for ideas, and he's like, well, that guy talked about this stock, I should go buy it, which is what a lot of people do. A lot of people do that. They don't have their own written down plans. They don't subscribe to platforms like OVTLYR, which is just 82 cents a day to give you all the data that you'd need. And then he is just hoping and praying that's working out. And it's really exciting when it is working out. But the problem here is that he's not learning risk management, clearly. He's not learning how to manage his trades. All he's doing is hoping for the best. And this is probably not going to work out.
Which is pretty good for a college student who started with just $2,500. On September 26th, he posted a huge loss. But if we actually do some math, it seems like his total portfolio is now worth about 114K, so more than double from his last post. Ringed Falls is a
Well, what do I know? Maybe I should go on Reddit. There you go. I'm just a random guy on the internet. Don't listen to anything that I say. We need to go listen to that random guy on Wall Street Bets. Let's go look at a couple random stocks. How about SoFi? SoFi Bros Unite. SoFi Bros Unite. SoFi, by the way, SoFi cleared this order block and then cleared a second order block right here. I think SoFi's got a lot of legs to it, right? It's got the trend. It's got the buy signal. The sector, not so much. It does have bullish breadth on the sector, but the sector is getting a little bit more fearful. The fear and greed on SoFi is continuing to move down right here, though. So if SoFi, I mean, I think SoFi's got some legs to it. I really, really do. Now, granted, I don't make predictions. I'm just looking at what the data says in front of me. And I wouldn't be buying it personally until I see all OVTLYR 9 lit up and it fits inside my trading plan. But I could totally see SoFi having a bit of a run right here. If it can clear 31, 32, who knows how far that could go. SoFi Bros Unite. SoFi Bros Unite. How about Robinhood Bros? How about Robinhood Bros? Sell signal today. There's a sell signal. Alert the neighbors. There's a sell signal today on Robinhood. Earnings come out later today. Wednesday, tomorrow, Wednesday, November 5th, after hours. So take this exit. Listen, but here's the deal. Chris is going to say that you got sell signal and to take an exit, and it's going to go up. I'm telling you right now, that's what's going to happen. Or if Chris said, you know what, it's a buy signal today, everything looks great, it's going to go down. I'm a random guy on the internet. Don't listen to anything that I say. But I would definitely be taking a sell signal right before earnings. That is absolutely in my plan. Final one. How about Tesla? Tesla in the discretionary sector. Fear and greed going down. Breadth going down in the sector. Tesla bucking the trend. Let's go look at the Tesla chart real quick. I mean, Tesla's really fighting through this area right here. Oh, it did break the order block. Now, what is an order block and why do you care? You can get your chart set up looking exactly the same as mine using the Discord indicator that we have, literally for free. You can make yours set up the same as mine. You get a free TradingView account, get the free indicator that we have in our Discord, and you can see right here that these buyers who bought at the very top of Tesla have been sitting here since last December. So nearly an entire calendar year, they've been waiting and hoping and praying to finally get out of break even. The very first, and by the way, it went down like 50 something percent, I believe. Let's see, top to bottom here. Yeah, around 56%. So the very first time it came back into this area, the sellers were rampant. The sellers have been rampant. I want to count how many days it was in this order block right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 5, 6, 7. 27 trading days it took to finally liquidate all the sellers out of here, all the people who bought at the top. 27 trading days it took to get through there. Now Tesla might have a big, beautiful run through here, but of course it's got to fight against the discretionary sector. But you know, Tesla's its own thing. Tesla doesn't care what the Tesla doesn't care at all what that sector is doing. Tesla is Tesla. Let's watch a couple more stories.
Another user who needed to make some money to pay for college, and like any other smart investor, he turned to good old WallStreetBets. In the summer of 2024, he threw $4K into SPY calls and nearly doubled his money. He had just about $9K in SPY options, and things were looking bright for him, until he lost $3,400 the next day. No worries though, because it was back up the following day, and he sold for over $3K in profit. He took a break, but a few months later, Ranked Falls lost $18,000 in a single day, most of it within an hour. He came back a couple weeks later to show off his $8,500 HIMS gain, and only 5 days after that, he reached $30,000 in his portfolio, which put him up 180% over the past month. With the help of meta calls, Hood, and even more HIMS calls, his portfolio miraculously reached $50,000 only 2 days later, but he proceeded to lose 75% of his money the following week.
Could you imagine? So there's a quote from Ed Secoda, that everybody gets out of the market what they want. I want to make money in the market. I have no desire for the market to be stressful. I have no desire for the market to be exciting. I just want to follow my plan and get in, treat the market like an ATM machine, and take my money out. That's it. That's all I want to do. Somebody like this clearly wants the excitement. They want to show the gains. They want to show the losses. They want the sympathy, and they want the accolades. This person obviously has a very different mentality than a professional fund manager. I don't want you to have this mentality ever. I want you to treat your account as if you are a fund manager. And I say that all the time because this is what happens to a lot of people. This is what happens to 90% of people. 90% of traders lose 90% of accounts in the first 90 days of trading. They do this. They get excited. They forget all about risk management. And then they watch their account 75% evaporate within a week. I don't know what to tell you. What we're seeing on here is normal AF. I don't want you to be normal. I don't want you to be normal at all. I want you to be an outlier, right? You can get access to our platform, 82 cents a day. You can watch us trade and hopefully win the U.S. Investing Championship next year. And I say hopefully, which I've come back on my rhetoric some because I had planned to win the U.S. Investing Championship in 2026. But now we're getting as many outliers as possible to join the U.S. Investing Championship with me. And I'm hoping they beat me. I'm hoping they beat me. That's my plan. I'm going to give you all the tools to be successful. And OVTLYR University starts next week, Tuesdays and Thursdays in the afternoon. We'll be going live, and I'm going to teach you everything that I know. What some people charge tens of thousands of dollars, I'm going to give you for free. All that I ask is that you watch and you share the videos and you help out as many people as possible be successful in the market as well. Because we don't want this to happen to our account or the people that we love or the people that we care for. So if you're ready to save time, make money, and start winning with less risk, click one of these two videos, and we'll talk soon.